Hi everyone, Jeff Yasteen here. Make sure to subscribe to us here at Wealth Press. Just hit the red YouTube subscribe button and follow me on Twitter at Jeff Yasteen, as well as on Facebook, Jeff Yasteen1. And make sure to leave your thoughts and questions in the comment section below. So speaking of comments, I posted a video the other day about a forgotten fuel cell stock that I like. So make sure to watch that video if you haven't seen it already. But my friend Lisa posted a comment asking if I could discuss REITs, that is real estate investment trusts in the retail sector, like Store Capital Corporation, STOR, Realty Income, WP Carry, WPC. So if you own any of these stocks already, that's fine. Stay with them, presuming they're long-term holdings for you. Most people own them because of the substantial income, the dividend payouts that they provide. So more on that in a moment. But if you're thinking of buying them for the first time, whether it's for the dividend or because you want to speculate on the recovery of the economy or the retail sector, I would say wait. Now, one reason is because it's late summer, and I just don't trust the strength that we're seeing here in the broader market or trust that it's going to last beyond Labor Day. As I've pointed out in a few other videos, during the early phase of the dot-com bust back in the year 2000, the NASDAQ sold off hard in March. It fell about 40%. It then rallied through the summer, and basically by Labor Day weekend, it was only down about 15%. The S&P was almost at a new high, and that's when the real decline happened. So I can't help but think we're being set up for a similar sharp market decline in coming months. Just call me suspicious. The other reason, as we look at a chart here of Store Capital, has to do with the overall health of the stocks that make up the retail real estate investment trust sector. Now, these particular REITs here, like the one you're seeing, Store Capital, Realty Income, WP Carry, they've done okay in the past 4 or 5 months. They're up about 50% since March. And as you know, physical retail, bricks and mortar stores as real estate assets haven't been in favor with investors in recent years. But if you had to own physical retail assets, owning standalone parcels with a single tenant building on it is the way to go. I mean, that's what these REITs do. They buy the store and property from a retailer and they lease it back to them. But what bothers me is that other kinds of retail real estate investment trusts, those focused on malls and outlet shopping centers, have barely moved since March. So let's take a look at Simon Property Group as one example. It's the nation's largest mall owner, but the stock, even though it is up a bit, is basically flatlined, and we can kind of show the same for Tanger Factory Outlets or even Seritage, which is basically a real estate investment trust set up that owns the land underneath a lot of the Sears mall units that have been closed up in recent years. My point is that if retail real estate was truly in comeback mode, I would think that these companies' stock charts, not just Store Capital, Realty Income, and WP Carry, but the mall and outlet real estate trusts would all be making new monthly highs. So, I think buying Store Capital and these other stronger ones at this point requires taking on some risks that I believe are not yet reflected in the prices. For one, the share prices for many REITs, they're up 50 or 60% from the lows, like we talked about with Realty Income. But I think that if we see a broader market sell-off, it's still going to drag down a lot of these stocks with it. There's also the ongoing risk from COVID-19. If it flares up in the fall and winter, these REITs also could fall back towards the lows of last March, where, quite frankly, there'd be much better values to buy than now. The third risk is the economy. The longer the pandemic goes on, the more damage we sustain to the economy. Stimulus packages and zero interest rates only help so much. So if there's a recession and consumer spending falls drastically, again, these REITs will most likely lose a fair amount of ground from current levels. What I would do is not buy these real estate investment trusts, but I would watch them. Watch the stock price charts. I believe there will be a better, more profitable time to buy them than now if we're patient. The other thing I would do is keep my eye on vaccine developments for COVID-19. So when vaccines are at the stage where they're really going to make a difference, we will start seeing that show up in these sort of dead retail REIT stocks like Simon Property Group and Tanger Factory Outlets and Seritage. We will see them start to wake up. All three are well run. They're conservatively managed. I'm fans of retail REITs in general. They own important chunks of real estate that should be increasingly valuable, not to mention being an inflation hedge in the years to come. But I don't think we're at that point yet where Wall Street appears ready to step in and buy. So these sort of worst performers, if you will, just kind of drift along. And that's just a sign that Wall Street investors just aren't interested in these assets yet. Store Capital, Realty Income, there's really just the best of the worst, and that's why they're getting more buying and their stock prices are higher. But that's my message. Watch these stocks. They're like canaries in the coal mine. And when they're ready to start moving higher in a big way, believe me, they will begin to make new weekly and monthly highs. More importantly, lots of people will not believe that the decline is really over with yet, and they'll stay on the sidelines. That's just the truth of what happens at real bottoms for stocks or sectors or markets that have been beaten up and out of favor for a long time. After being burned once, investors are twice as shy to get involved again. And basically, people, the broad mass of investors stop asking if there's a bottom in these stocks yet. So like if we go back to Realty Income, just to do a tiny bit of technical analysis here, the other key to watch out for, this is something I've mentioned from time to time, nothing ever works 100% of the time, fundamental analysis or technical analysis. But one thing I like to look at, just in very simple terms, is whether a stock is making new highs or not. And you can see here in October, Realty Income made a new high and made another new high in February, just before the pandemic panic hit the stock market. And look what's happened since then. Number one, WP Carey and Realty Income and Store Capital are all still trading at or below, mostly below their 200-day moving averages. So it shows that there's still some weakness there from a technical standpoint. The other thing is, look at here. This stock made a sort of nominal near-term high in mid-June. And look what's happened since then. I don't know if this will turn into a trend or not, but it's really not what you want to see. And the same thing for, let's take a look at Store Capital. If I can punch in the right stock term there. And so again, we kind of have the same deal. We have a high in November, a slightly lower high in February, then it fell off the table. And since then, again, we have a high in early June, still below that 200-day moving average. And now it looks like it's having difficulty making a second new high. Now, again, if these happen to really shoot higher, and I think WP Carey is about the strongest of all three of these. Yeah, it is. Again, it's trading right at its 200-day moving average. And, if you can see these start to keep popping higher, that's a good sign. Absolutely a good sign. But the next thing to do is to look out at Tanger Factory Outlets or Simon Property Group or Seritage and see if you're seeing any accompanying sympathy movements in those. And again, these are just as charts, they're just hard to watch. They're hard to look at because, again, they fell off the table and they just have not responded despite this huge run that we've had in the broader stock market and, of course, especially in tech stocks since the bottom of the market came in March. So that's why I say hold off, be patient, and let's watch for better opportunities to come along. I think that they will happen, and we may get a lot more of these sorts of opportunities across large sectors of the market if we just stay careful and watch our steps here as we head into Labor Day and the weeks beyond that. So let's stay tuned. Let's see where things go from here. Until then, make sure to subscribe to us on YouTube. Follow me on social media. I'm Jeff Yasteen.